Hey traders, welcome to Charts and Coffee. Happy Monday, everybody. Good to see everyone. All right, so what do we have going on? You'll notice just next to my head, you'll see there's a list highlighted in red. Take a look at the hot zones for this week. What are hot zones? Any scheduled, high impact, high volatility event. Scheduled being the key word. There's lots of events that happen that may not be on the calendar. Very difficult to play the discounting reaction game that is an economic event. We've got Bostic today. We've got George today. We've got new home sales. Got Powell tomorrow. We got FOMC minutes. So we've got a lot going on by way of understanding what is on track for monetary policy and if the Federal Reserve is really going to stay as hawkish as it seems that they are. If there are going to be opportunities for the Federal Reserve to cool off or even pivot on the messaging, it's going to come with events like this, minutes or actual events with Powell. And take a look. We've got a lot of interesting data, GDP, PCEs. We have growth and inflation data coming out this week as well, which are two of the most important macroeconomic pillars that we keep an eye on. All right, so that is what I wanted to remind everybody as far as kicking off our Monday show. So let's go ahead and, as always, dive into the questions, because that is the goal of this show, diving into your questions. And let's see here. I got my multi-charts going on. We're going to be doing some scanning this week for more entries in this environment, shorts on rips. Keep an eye on financials. This has been a sector we've talked quite a bit about in the weekly notes. If you missed the Sunday show, by the way, that is available at the Simpler Trading YouTube channel, likely the channel you're on right now, or my personal YouTube channel. So you can check that out at your leisure. All right. So as always, let's get to it. All right. First question to kick off our session is RF. How are you? How do paper cuts work with futures? Same idea. Designate a certain amount of risk to the overall account, designate a certain amount of risk to each trigger, and when the paper cut level is reached, we exit. So are there differences between futures and options? I get this a lot. And the answer is really no, because the same math that would lead to blowing up an options account, money is money. It doesn't matter the asset class. It doesn't matter what you're trading or even how you're trading it. Money is money. You're going to have to think about the speed at which futures move, but it's the same way that I teach with options trading in the Sector Secrets Mastery. That account size dictates position size, and position size is dictated by your risk. So that's the process. And it doesn't matter if it's Forex or crypto or whatever. So thanks for the question. Harley, long put entry zone in VALE. All right, let's take a look. All right, take a look at VALE. And what do we have? So 200 is in play. By the way, Rio is in play as well. Rio has a double red trend. Val has a double red trend. So the 200 in play on VALE, I don't have a problem with that. I don't. The main issue is going to be, do we stay below that level or not? And we're opening above, right? Harley, when you see the open today, we're above 17. So we're trading right around the 21 propulsion, which is not a problem per se, but I would say keep an eye on RIO as well. That's going to open up around 71. At least that is still, it's going to open up almost 72. But that is still within, actually, no, it's going to open up at 70.83. So that's inside the wave. Maybe Rio gets a slight edge, Harley, in terms of the comparison between the two, because they're both number one and number two weighted within that SLX. All right. So thanks for the question. Zion, with UUP coming into the wave. So UUP today is going to open around 27.40. We already have a long position in UUP, but if I would, so Zion, I'm going to follow the alert that I sent out to the mastery members, and we've already got a position here, and that position is in the September expiry. It's in the September expiry. All right, next up, BMY. BMY and Merck, and Debbie, I know you know this, are the two strength stories in XLV. So if you take a look at XLV here, there we go. Take a look at the two strength stories, MRK, BMY. Now, these are two strength stories that are happening within the overall downtrend of that sector ETF. So they're really, and admirably so, moving against the broader tide. That's a really good reason to, I have no problem with the setup. BMY doesn't have the same crispness, right? BMY is getting rather choppy. It's kind of sort of chopping along, but higher along the wave. And that's not exactly what I want to see. Although what's interesting and what's important is that we just put in that higher high, which keeps the broader market attention on this bullishly. Higher highs are very bullish for markets in terms of what retail traders and investors perceive to be strength or weakness. So that's good. I like pullbacks after at least a new near-term high. It's buyable. Just be careful here because, again, you're fighting this, right? You're fighting an outgoing, bearish tide. So adjust the position size accordingly. John asks, will stock splits affect the weighting of Amazon and Google in the ETFs? It depends on whether it's a volume weighted, price weighted. So you really have to look individually. Probably not as much as folks think. I think what's going to ultimately happen is that when you look at Amazon and XLY, when you look at Google and XLC, the effect on QQQ or the NASDAQ futures, they're going to still be very influential. I just think the biggest change for us as traders is they're going to be more affordable options to trade, which is great. Now, a lower price in the underlying stock does not always mean it's going to be significantly less expensive to trade. For example, you look at AMD. AMD is not a really expensive name, is it? Right? AMD is not an expensive name, yet it's a fairly spendy option. But I think it bodes pretty well for us. All right. Hey there, Nancy. Love your shows. Will I please review? Oh, well, my pleasure. Thanks for watching. Otherwise, I'd just be talking to myself. Brazil, with the rollover that we saw, and you can see it happen on EW. So the Brazil ETF is very much a commodity synced up ETF. So when the commodity narrative rolled over April 21 to 25, it took this ETF with it. So I don't love the idea of engaging it because if commodities start moving higher again, this will be that rising tide. However, that said, it's double red. We're inside the wave. It's shortable, but I can't say it's probably one of the ETFs that I'm looking at really closely. You'll notice that most recently it just ticked back into a neutral trend, but the trend that preceded it was clearly down. So it's bearish. It's generally bearish, and I prefer for it to stay below the 200, but it's going to open up pretty strong today. So be patient with it, Nancy. I think the commodities volatility is tricky. It's tricky right now at best. All right. So next up is Michael asks, Fed is speaking Tuesday, could reverse any gains in this week. I don't know. We'll see. Right? We'll see. Look, Michael, and I say that succinctly because I say the prediction for clearly the geniuses, the clairvoyant crystal ball geniuses on television or whoever else out there has deluded themselves into thinking they know what's going to happen. I don't. Process over prediction. We'll see. I mean, we're definitely going to see some volatility. I can say that. We're definitely going to see some volatility, but I've got no idea. Next up, Janelle asks, when you trade shorter time frames, what time frame do I prefer to trade off of? 2s and 5s. When I'm day trading, 2s and 5s. So shorter time frames to me are always day trading. I'm either on a daily time frame and I'm playing overnight quote unquote swings, or I'm on a day trading time frame that's either a 2 or a 5 minute. And so 2 or 5, that's the answer. Next up, ZB or TLT. Hey there, Harry. Ready to short. Um, it's moving back down today, so I would say no. Friday or even Thursday would have been the yes day. Um, Today, not so much. We're opening closer to 117, so bearish momentum means no put buying. But all my cards on the table. I'm in ZN. I'm in IEF. A number of the Sector Secrets Mastery folks are in TLT and IEF. So that move to the downside. And I'll tell you what, to your point about TLT, that's actually ended up becoming NZB, the long bond futures, that's ended up becoming the better looking of these two trades. Now, at the time, 10-year note was trending lower nicely. It still is, but ZB seems to be a little bit snappier with that downtrend. I think 6 of one, half dozen the other, but there's definitely more of a neutral sentiment and trend that's worked its way into that ZN. So if I were looking at both of these today, fresh eyes, without the bias of already having a position, and believe me, if we have a position, we have bias, right? If I were looking at both, I'd likely set up ZB, but it would have to be on an up day. All right. Next up, let's see, Charlie, the charts are red. Does that mean we would expect morning futures to bounce and fade in a day or two? Again, we're going into prediction. I could answer yes, the first part of it. Well, I expect the morning futures. So, Charlie, I have no idea. We don't know what's going to happen. We just know there's a probability. So could we see, because we're in an overall downtrend, could we see the gap up faded? That's oftentimes the probability, right? So I'll look for that setup. So we have an idea of what could happen. Now we need the confirmation of it. So whenever you have a could or might or something that you think is very likely to happen, on the other side, say to yourself, what is then the setup that confirms what could happen? So whenever you have a could idea, make sure you have a confirmation idea as well. Do I think the path of least resistance is lower? No doubt. No doubt. However, if there are catalysts, if there are reasons to disrupt that whole could to confirmation process, it's Powell, it's the FOMC members, it's the minutes. I mean, this could be it could be GDP, it could be PCE. PCE is probably going to be second only to the minutes. I mean, Powell is number one. So let's get that out of the way as far as events that could move the market this week, followed by FOMC, followed by that PCE. So very, very hot zone this week. All right, next up, the euro. So we'll start this BTI at the 6E level, 106, bouncing a bit. That's fine. Overall downtrend. This is the inverse relationship to the US dollar, and it's rallying into the wave. That's okay. It's not great because I've got a fairly aggro position that's likely at this point going to have to be cut loose. But that then opens up some capital, both mental and literal, to start building the conservative, the moderate zones that I want to take advantage of. That means UUP is pulling back as well. So UUP is going to pull back, FXE is going to bounce a bit, but both of those are really opportunities. So just to give you all a little bit of a framework for where I am at, we've got a 97.50 aggro trigger on the FXE and a 98.10. So I mean, we're not getting annihilated by this action, right? We're going to be opening up 50 cents above the moderate trigger. So yes, I might have to cut that aggro loose, get in that moderate, and start thinking about where my conservative is. So this is not unusual scaling in and scaling out action that I teach the Sector Secrets Mastery members to do, so we can do what? Control risk. So that's going to be an interesting, quick couple of decisions we're going to make. Do we or do we not let cut the aggro loose? And do we or do we not go ahead and grab the moderate. I'm going to take advantage of that moderate 98.10 for sure. I mean, I like that level very much. Very much. It's not even to the wave yet. It's not even to the wave. So if you're wondering, oh my gosh, does this move in FXE or 6E undo the downtrend? Not even close. So we're in good shape there. So those are my thoughts. BTI on FXE. All right, next KO. So when Coke and a couple other big drops last week came plummeting down to the support of their 200 propulsion, the idea was, and this is not a trend follow, so please know, really no more than about 20% of the open trades in my book at any time should be non-trend following. So a very small number of overall trades in my book are allowed to be, that means one or two trades max. So if I'm usually going to be somewhere between 9 open trades, maybe sometimes more if some of the trades were open, hit their first target, that frees up a slot. That's the way that I enter trades. It keeps us very focused on the best of the best, right? Rather than having the possibility of unlimited open positions, which frankly, nobody really probably can do. You know, we all have budgets we're working with. We all have account balances that we're all working within the confines of. If I have a Coke trade, it's going to be one of two choppy markets that I'm allowed to trade. So then I look at all my chop setups and say, is this the one that's the best? Is this the one that's giving me an opportunity? And trade accordingly. I'll usually use a smaller budget too. Debbie, yeah. So the fade off 200, maybe the minor low. It's a nice setup. It's a nice setup. Yeah. All right. So next up is, what's with people calling me babe? All right, next up, Rajas, love your show and the way you teach. I appreciate that very much. I have an issue on multiple time frames. Say I'm trading using a 30-minute chart, then I see 5-minute go negative. I panic. How do I overcome this? So I don't use a 30-minute chart. And if you're using a 30-minute chart, Raj, I know this is going to sound silly, but this is for any time frame. Why are you looking at the 5? Right? If you're using a 30-minute chart, your risk, your entry decisions, your exit decisions, your structure, your indicator signals, they're all on the 30. So kind of who cares what the 5 says, unless you're setting it up on the 5. So this kind of trips into this very popular notion of multiple time frame confirmation. I don't really care what another time frame says about my setup. So the only way another time frame is interesting to me is if inside the 30 are a number of 5-minute charts, right? 6 5-minute candles, number of 5-minute candles, not charts. If the 5 allows me to be a little bit more aggressive and front run the setup, confirm a little bit more aggressively what is going on inside that, relative to the 5, this rather stoic looking 30-minute candle, cool. But I don't care what the 30 says in terms of the rationale and the validity of the 30. So ask yourself, if I've set this up on the 30 and all the reasons that I'm trading the 30 are still valid, then I don't care what a 5 says. So that's, how do you overcome it? I mean, I know this is going to sound silly. Stop looking at it. And I say this to myself too. Stop looking at it. It's not really, unless you have a process, unless you have a process. And then in which case, you know the why, and it's less likely to induce panic and concern and confusion and so forth. So that's my 2 cents on that. Cool question. Great question. One that I get quite a bit of. So gang, thank you as always for joining me for our Charts and Coffee. Gosh, that 20 minutes goes by so quick. Great questions. I do appreciate it as always. Thanks for showing up and caffeinating and dominating. Leave your questions, leave your comments. If you're catching this on replay or later on below, thanks as always for your time. Thanks for smashing that like button. And I'll see you all tomorrow, same time, same station. If you're looking for a little bit more content, a little bit more context, you can check out the Weekly Notes live show that's already at the Simpler Trading YouTube channel, and the weekly notes that I've already sent out via alert to the options, futures, and the sector secrets mastery rooms. Check the alert section for that. All right, off to trade the open. See what kind of day trades we might have shaping up. Be good to each other, gang. I'll talk with you soon.